What's going on, traders? Today is day number 25 of the $1,000 account challenge, and it's a red day. We are down $145 in the account, or 6.75% of the total portfolio balance, bringing our balance back down to about $2,000. And, I got to say, red days are part of the process, right? You might see a red day down 6.75%, but I might see that I'm still up over 100% in this account since we started the challenge. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account using my system only. Today, straight off the day trade watch list, we had Meta as a long idea above $389, which is right here. Now, you might say, Gates, Meta breaks 389 and pulls back to it. Why did you not take the entry long when we get the pullback to 389? And I saw a couple of members of my Discord server do this. Typically, that is how we trade. However, I did not trust it, and for a few reasons. Number one, the stock on the daily time frame, if I just back this up, the stock on the daily time frame is already fairly extended, right? Number two, if I move to the 5-minute time frame, we have a gap up day. So it's a gap up day on top of a stock that's already extended. Then we can go another step further and say that we get an opening run on top of a gap up day, on top of a stock that's already extended. So it's just too much extension. If you've been trading with me for any amount of time, you know that I do not like gap up days, and for a very specific reason. It makes stocks feel extended. How much further can this realistically run without any sort of major pullback? So I did not trust this pullback, at least the first time, to the trigger level. And I had this bounced and then rallied back up to high of day and then pulled back and put in a higher low and then started to go again. Maybe I would have trusted that second dip a bit more, but definitely not on the first dip entry offered. And it was the right choice. The stock sells off down below the low of day pretty aggressively, and starts to work on filling this gap that it had gapped up from. So in my mind, I'm thinking, you know what, this is watch list rule number 4 in play, where the stock is rejecting the long trigger and we're actually going to take it short. So I waited for a rally up. Now, understanding that the opening price, the intraday support, is going to be at $388. When this rallies back up to $388 or close to it, I went ahead and took my short entry. And I mentioned to everybody in the alert room that that was my plan, right? So I said the trade plan here at 9:43 a.m. is Meta short on a rally with a stop loss at $388. My thought process was that this is going to sell right back off and fill this gap down to the previous day's closing price, just like it's doing over here. Obviously, that didn't happen. This trade resulted in a loss, but that was the plan. So we take the short entry on a green candle. We get a pretty good fill, pretty close to $388. Not a bad entry at all. We get the sell-off right away. We are up on the position 10% right away, and I'm looking for more, right? And maybe I made 2 mistakes here. Number one, having too much confidence in this setup because I sized up on this. I'm using a little over $1,000 capital here on this trade. Number two, the stock gave us profits. We were up 10% when this dropped down. I had $100 profit sitting right there on the table. I didn't take it because I was looking for more. So maybe I should have scaled out of this trade at 10% and then closed the rest at break even. Maybe I should have sized down a bit more. A couple of different ways that I could have went about this trade, but hindsight's always going to be 20/20. So the stop loss is at $388. The stock rallies back up off of the low of day bounce to $388, and I'm holding. I almost get faked out on this, holding. It drops again. I'm back to break even here. Didn't close the trade out, still just looking. I was looking for that drop. I was looking for that move down at the previous day's closing price, which we're getting over here. It's very frustrating. We don't get it. It bounces again right off the low of day, rallies back up, and I'm like, you know what? This is chop, right? I don't want to be stuck in this chop. I don't want to hold this position any longer. So I wound up cutting it here, just under my entry price, but for a little over a 10% loss as the stock rallied back up because I just didn't want to be stuck in the chop. I didn't think that this was going to give us this drop down today. I thought maybe it could consolidate or even rally back up to the high of day. So, it is what it is. If the stock doesn't make the move that you're expecting, it's usually better to just cut the trade earlier rather than hold and hope. So that's what these alerts here are for you. So as I Meta back to break even here, looking around the price action this morning, really has not been that clean. So I haven't felt the need to close out the position and jump into anything else. And then the next alert that I send out at 10:10 a.m. was, hey, I closed out Meta short at 115 for about a 12% loss. Then I apologize. Sorry, team. We had a green entry. We had a great entry, and we were up. I just thought that we were going to get this flash move sell down here rather than, about an hour later. So it is what it is. Red day in the account, one and done type of day where I took just that one trade down $145 or 6.75% in the account. But you know what? We've made the money once, and I do have confidence that we can make that money again. So thank you for watching. Press that like button for me if the video has helped you out, and I will see you tomorrow when we continue the $1,000 account challenge. Thanks for watching.